Welcome to the 2024 Las Vegas Real Estate Report. In this video, I'm going to cover the January Las Vegas area housing stats, review 2024 housing predictions. What is the Fed going to do in 2024? When are they going to cut rates? Well, that is definitely the question, and everybody has an opinion. Which means what is going to be happening with mortgage interest rates. And then what's up with new builders? Are they starting to change their incentives? We're going to cover all that and more in this edition of the Las Vegas Real Estate Report. My name is Jan O'Brien, along with my co-team leader, Cosmo Morabbi. You can follow us on TikTok, Instagram, subscribe right here on YouTube. We have an amazing team of experienced professionals covering all parts of the Valley. Make sure you reach out to whoever sent this video to you to help you. We're here for all your real estate needs all around the Valley. Let's dive in. So what happened in January? If you remember if you've been watching the previous video for the end of 2023, we ended up at just about 450. It was 449,500, and it went down just a little bit here in January to 445. That's still up almost 5% year over year in January. I've got this chart here just to get a sense. I like to kind of track the numbers that I report on a monthly basis in relation to where have we come. So you can see in January of 2023, here's where we were, right around 425, and we're up at 445 for January. And you can see it was flat for the beginning of 2023, then it went up. We kind of hit a high here in July. And then we stayed pretty much around 450 for all these consecutive months with a little slight drop here. We'll see. I mean, feels like we're going to, just looking at the numbers for February already, it's very possible that number is going to go up a little bit, not down. Okay. What else happened? Cash sales, they hovered all last year right around 26 to 28%. And in January, they were 27.4. Distressed sales continue to be less than 2% of all sales, 1.5 in January, and that would be foreclosures and short sales. Other things that are notable here, 11, a little bit up, units that closed in January were up 11% year over year. New listings staying kind of flat year over year, down about 2%, 2432, but really available inventory was considerably down year over year, almost 35% down, meaning 3551 single-family homes were available at the end of January. That's down 35% from January of 2023. Reported on this last month in the last month annual recap. But again, just a good point of view here to see this was a really low number of overall closings in 2023 across the board here, 22,500, 27.8. This was the peak year here, COVID years where the interest rates were so low. We had a record 38,690 sales. So thinking this is going to potentially come up a little bit this year, and maybe we'll just have to see. The available inventory continues to be low. Comparative, if you come back here and look back in 2014, 7,000, 7,000, 5,000, is where you had much more inventory to pick from compared to the last couple years. All right, where does everyone think the housing market is going? And I wanted to talk about this month because the original forecast that came out from the various experts around, everybody from National Association of Realtors to Fannie and Freddie, Zillow, Mortgage Bankers Association, Goldman Sachs, this was their original forecast as of November of 2023. Here's their current forecast, and you'll notice they pretty much went up. I mean, Goldman Sachs definitely 1.9 up to 5%, thinking what's going to happen to home price appreciation, home prices. You don't see anything on here where it's going down. So again, if you follow the channel, if you go back and look at the previous videos, we're always addressing on the channel here. There's so many people that think that the sky is falling and we're going to wait to buy or sell until, well, maybe not sell because you want to sell at the top of the market, but for buyers for a moment. I'm waiting for prices to come down and I'm going to wait for the interest rates to come down. Now, what's been happening is we really have 2 years of a lot of people really getting ready, and we're already starting to see signs of that. I really think the spring market's going to show, I'm going to talk about interest rates in a moment, but we're already seeing signs here in the Valley, out at new homes, people that are reaching out to us, people are just sort of tired of waiting. So I'll talk more about buyer and seller opportunities at the end of the video. But I just want to point out that the experts out there are all saying the appreciation is going to continue this year. And it's because of two specific things. It's always about supply and demand. And supply, low inventory is the consistent number one issue, coupled with high interest rates. And if the interest rates, and if and when the interest rates come down, I do think it's going to be second half of the year to see any significant changes in it. That's when we're really going to see, I think, prices even go up a little bit more. Okay, so supply of homes may grow, but only, I think, we're starting to see more listings come onto the market. We'll see in the next couple months as we report every month on the channel. But maybe more sellers are, wanting to go ahead and finally move, just depending on what their circumstances are. We're seeing just a little bit of that. The increase in sales due to all this pent-up demand, we're starting to see that already here in January. And it was the tail end of January, but definitely seeing it in February here in the Vegas Valley. And prices are expected to rise, not fall. So the big question is, when is the Fed going to cut interest rates? Well, at the end of the year last year, it was like, we're going to have 6 cuts. And then some of the inflation data came out and they're pulling back on that now. So if you follow any of the headlines, right here, this one is Federal Reserve is on track to cut rates, though not likely for months. That's what I've been saying, and I agree. I further agree now, because I think if you follow the news, the Fed wants to make sure they don't cut rates too soon, which would just reverse inflation. So we saw some data that came out in January that the the inflation rate didn't come down as much as everybody hoped it would, which has them sort of pausing, okay, which means the interest rates stayed here. So here is from the 27th, from the 30th of January, to almost the end of February. Here with the conventional, I'm just going to look at the conventional column. You can go over here and check out the FHA, which is always about a half a point lower. But 7.16, 7.13, they've been in sevens right here, hovered a little bit below 7 for the beginning of February. Okay, but we've had that for months. Okay, a couple other headlines. A Reuters poll, this is interesting. The Fed to cut U.S. rates in June, according to an economist survey, that a Reuters poll of economists. Slim majority, 53 of 104 of the people polled, the economists polled, now expect June as the most likely meeting. And they poll them every month, and they previously thought it was going to happen sooner. Now people are saying, because of what Jerome Powell is saying, looks like June maybe, with a 33 of the 104 saying May is where we might see the first cut. And then it could be second half of the year. So this is more than likely what we're going to see. It all depends on what the data says when the jobs reports come out, the inflation, the different PCE, the CPI reports. When all those things come out every week, there's something coming out that impacts the market, the bond market, the treasury, and that's where the interest rates will then adjust. Okay, so Fed rate cuts, this is from Bloomberg, likely to be slow but not necessarily steady. Policymakers pledge patient and slow pace of rate cuts. That's where you have to look at. I think they're going to come down eventually, but I don't think it's going to be until now. I'm feeling similarly, maybe late spring, early summer. So where are the opportunities? If you are a buyer, the inventory issue continues to be a challenge. So there are properties that are out on the market, and I feel like it's a mixed bag. It has been like this for months, meaning there are not a ton of homes to choose from comparative to years past. The inventory, things move quickly. If a property comes onto the market, on the resale market, and it's in great shape, it is gone. We're working with buyers right now, and they're not able to get concessions. They're having to, if it's turnkey, ready to move in, it's been updated. If it's an older home, it's been updated. Everybody wants that. Nobody wants to necessarily go in. Majority of people do not want to go in and make the renovations. So multiple offers if it's in great condition and price. You have to bid, which is what's going to happen when the rates come down. You have to get ready for that. If you're waiting to purchase because you want the rates to come down more, just be prepared to be competitive, okay? You're going to have to be competitive. The sellers aren't, including new homes, are not going to offer the same incentives that they're offering now. It's all going to shift back, and the sellers, including the builders, are going to have all the leverage. As a buyer, you still have some leverage right now, especially in resales. that have been sitting on the market and haven't moved, we're still able to get closing costs covered, get a better price. So be prepared for that. New builds, more and more builders seem to be, every week they're changing their deals because they're watching what's going on with the interest rates. So interest rates staying where they are in the low sevens, high sixes is a benefit currently to people looking to purchase a home because the builders are still offering incentives. They're maybe not as aggressive as they were. It just depends on the builder and how they do things. Some builders like to slow roll the inventory out there, and they get you on a waiting list, and they only release a couple a week, and they sort of create that FOMO, that little fear of missing out, and a sense of urgency. And then there are builders who have inventory, they're building spec homes and they want to move, and they may be offering more, including incentives on interest rates. We've gotten people in this last month at someone as low as 4.5, 4.99, 5.25 right now. And those are things that happened a month or so ago. So right now we're seeing, 5.25. There's some ARMs, 2-1 buy downs. There's a lot of things that are out there. You just have to reach out to us. We know our team, we know where all the opportunities are for new homes out there. Okay. So it just depends on what your goals are. We definitely invite you to reach out, have a conversation. It's never too early to start talking about purchasing here, especially if you're thinking of buying new. And there are properties where you can build from the lot up. And there are a ton of new homes. There's close to 200, 250 or so different communities. Here are the top builders in town, just kind of showing the communities and the number of homes. And they're just all over the place, right? So here's the map showing where new homes are. So there's something for everybody. What's become more of the builders are moving to building more townhomes, even on the high end. Pulte is about to roll out a new community in Summerlin. Lennar has another one coming out in Summerlin that's 3-story and 4-story. So townhomes and condos. We don't have a lot of brand new condo projects, but we have townhome projects that are tending to be the most affordable at the moment. Some have backyards, some have really good, interesting floor plans. So again, reach out to us. If you're thinking of listing your home, you can certainly wait until the interest rates come down a little bit, where there'll be more demand, and maybe you might be able to get a little bit more for your house. But just be aware that if you're waiting for that to occur, you can't have it all. No one can have it all. So you can't sell high and buy low in the same market. You're going to be able to sell high if all of a sudden there's way more people wanting to purchase because the rates are down, and you're thinking, okay, finally the rates are down. It's not going to hurt so much because maybe we're under 6 finally, and you had that 3.5 or 3.75, but you're ready to move on to another property. And if you're going to do that, you can maybe get a really good negotiated deal on the listing side, and we're there for you, and we know how to do that. But now you got to take the seller hat off, put the buyer hat on, and now you're going to be competing with the other buyers. Okay. So I feel like there's always a little bit of a cusp time. And I feel like in the last month or so, going into the next couple months, I feel like that is that opportunity to be able, if you've got a great home and it looks good, it doesn't need a lot of work, you can maybe get competitive bids on it and get a really good price on your home and turn around and take advantage of buying a new home or finding another property that works for you. So whatever that looks like, just reach out to us. Okay. Come give us a call. We'll be happy to sit down, do a one-on-one consultation. If you're out of state and you're seeing this, we will set up a Zoom consultation. We are here to help you navigate the entire real estate process here in the Las Vegas Valley. Again, if you first time coming to this channel on YouTube, make sure you hit the subscribe button. We post this video every month. We have daily content that's out on other channels at Living Las Vegas New Home Tours, and at Living Las Vegas Henderson with the underscores. That does it for this month. Thank you for watching, and we'll see you next month for the real estate update.